Imagine you are standing on a dusty street corner in 1973. The sun is beating down on a line of cars that stretches for blocks. Drivers are leaning out of their windows. They are shouting and wiping sweat from their foreheads. Some are even pushing their vehicles because they ran out of fuel while waiting. The air is thick with the smell of exhaust and frustration. This was the great oil crisis. It was a moment of total chaos. At that time, the United States was facing a terrifying reality. The country was running out of energy and its currency was losing its grip. One shocking fact from that era is that gas stations actually had to use color-coded flags to tell people if they had any fuel left. If you saw a red flag, you were out of luck. You probably think of the dollar as something backed by gold, or maybe just the government's word. But back then, the dollar was on life support. The big question was how to save it. The answer came from a secret meeting that changed the course of history for half a century. But now, that very foundation is cracking. To understand why things are shifting today, we have to look back at the masterstroke of 1974. Picture a private room in Riyadh. The air is cool and smells of expensive incense. Henry Kissinger is sitting there. He is the U.S. Secretary of State. Across from him are the leaders of Saudi Arabia. They are making a deal that sounds like something out of a spy novel. The United States offered the Saudis a simple bargain. We would provide them with high-tech weapons and military protection. In exchange, they would do one very specific thing. They would price every single barrel of their oil in U.S. dollars. This was the birth of the petrodollar. It was a marriage of convenience that turned the dollar into a global necessity. If any country wanted to keep their lights on, they had to buy dollars first. This created a permanent, massive demand for American currency. Think about the sheer scale of this arrangement. It essentially turned the dollar into a world coupon for energy. Every time a factory in Germany or a school in Japan needed oil, they had to go through the U.S. banking system. This gave the United States what some people call an exorbitant privilege. We could print money to pay for things while other countries had to actually produce goods to earn those same dollars. It was like having a credit card with no limit and no interest. For decades, this system felt untouchable. It was the bedrock of the global economy. It allowed the U.S. to run huge debts without feeling the sting. This cycle kept the American lifestyle afloat. It funded the suburbs and the tech booms. It made the dollar the king of the mountain. But every kingdom eventually faces a challenge. Now, zoom forward to the early summer of 2024. A strange wave of rumors began to hit the financial news cycles. Reports started circulating that a major 50-year security pact between the U.S. and Saudi Arabia was about to expire. The date everyone pointed to was June 9th, 2024. In newsrooms across the globe, journalists were scrambling for answers. Imagine a frantic editor in a glass-walled office in New York. He is staring at a blank screen. He is trying to figure out if the world as we know it is ending. There was no official ceremony to mark the end of the deal. There were no big speeches. But the silence from Riyadh was deafening. The old agreement that required oil to be sold only in dollars was suddenly up in the air. This is where the tension starts to boil over. For the first time in generations, the Saudis didn't just reaffirm their loyalty to the dollar. Instead, they started talking about currency diversification. That is a polite way of saying they are looking for new friends. Imagine an investor sitting at a mahogany desk. He is watching his Bloomberg terminal. A headline flashes, Saudi Arabia joins Project mBridge. This isn't just a technical update. It is a shot across the bow of the American financial ship. Project mBridge is a system that allows countries to trade directly with each other using digital currencies. It skips the U.S. banking system entirely. It is like finding a secret path around a toll booth that everyone has been forced to use for 50 years. The atmosphere in Washington grew noticeably colder. Officials tried to downplay the news. They said the relationship was still strong, but the actions on the ground told a different story. By early 2025, the shift became undeniable. Reports confirmed that Saudi Arabia was now officially open to accepting other currencies for its crude oil exports. This wasn't just a theory anymore. It was happening. Imagine a tanker ship the size of 3 football fields. It is pulling out of a Saudi port. It is carrying millions of barrels of oil. But the payment for that oil isn't coming in dollars. It might be in Chinese yuan. It might be in euros. This change might seem small at first, but it is like pulling a single brick from the bottom of a very tall tower. There's still a real disagreement on whether this marks the total death of the dollar or just a slow decline. Some economists argue that the dollar is too deeply embedded in the global system to ever truly disappear. They say the infrastructure of the US Treasury market is too big to fail. But other finance people are not so sure. They look at the 2025 data and see a trend that is picking up speed. They see a world where countries are tired of being tied to a single currency. They are tired of the US using its dollar as a weapon in political disputes. This shift isn't just about economics. It is about power. It is about who gets to set the rules for the next century. Now picture a meeting in a high-rise office in Riyadh in early 2025. The windows look out over a city that is transforming every day. The Crown Prince is surrounded by advisors. They are looking at charts of global trade. They aren't just looking at the West anymore. They are looking east. They see China as their biggest customer. They see India's massive growth. The decision to accept multiple currencies is a calculated move to secure their own future. They don't want to be the ones left holding the bag if the dollar loses its value. This is a cold, hard business decision. It is a sign that the old security for oil deal has lost its luster. The consequences of this move began to ripple out through the global markets almost immediately. When the news broke that a major oil contract was settled in yuan, it felt like a physical shock. You could almost hear the intake of breath in trading floors from London to Tokyo. The dollar didn't crash overnight, but it started to lose its shine. People began to ask uncomfortable questions. If you don't need dollars to buy oil, why hold so many of them? If the world starts to sell its dollars, what happens to the value of the money in your pocket? This is the core of the 2025 petrodollar collapse. It isn't a sudden explosion. It is a slow, steady leak that is draining the pool of American influence. The shift in 2025 represents a massive psychological break. For 50 years, the world operated under the assumption that the dollar was the only game in town. That assumption is gone. We are now living in a world of options. And for the United States, options are a dangerous thing. The handshake that Kissinger made in the heat of the 1970s was a brilliant fix for its time. It gave the U.S. decades of unprecedented wealth and power. But it was never meant to last forever. The 2024 expiration and the 2025 reality are the final chapters of that era. The golden age of the petrodollar is closing. And as the door shuts, a new and much more uncertain world is waiting on the other side. Trust is a funny thing in the world of high finance. It takes decades to build and only a single afternoon to set on fire. For the last 50 years, the entire world treated the US dollar like the ultimate safety net. Central banks from Brazil to Thailand kept their life savings in dollars. They believed those dollars were untouchable. They thought as long as they played by the rules of trade, their money was safe in the American banking system. But then, the year 2022 arrived. This was the moment the ground started to shift under everyone's feet. It was the year the weaponized dollar went from a theory to a very loud reality. Picture a high-ranking official at a central bank in a developing nation. It is late February 2022. He is sitting in a quiet, air-conditioned office. He is watching a newsfeed on his computer. The headlines are screaming about the freezing of Russian foreign exchange reserves. Over $300 billion simply vanished from the global system overnight. They weren't spent. They weren't lost in a market crash. The US government just flipped a digital switch and said those dollars didn't belong to Russia anymore. You can almost feel the chill in that office. This official realizes that if it happened to Russia, it could happen to his country too. All those years of saving in dollars suddenly felt like a massive liability. This move was meant to stop a war, but it also sent a shockwave through the global financial plumbing. It was a clear signal that the dollar came with strings attached. If you disagreed with Washington, your national wealth could be erased. This created a sudden, desperate urge for an alternative. It was like everyone in a neighborhood realized they all used the same lock on their front doors, and then they found out the landlord had a master key he wasn't afraid to use. Suddenly, everyone wanted a new lock. They wanted a system where no single country held all the power. Enter the BRICS alliance. For a long time, this was just a catchy name for a group of emerging economies. It stood for Brazil, Russia, India, China, and South Africa. People in New York and London used to laugh at the idea of them ever challenging the West. They called it a talking shop with no real teeth. But as 2024 rolled around, the laughing stopped. The group started to grow. They invited some of the biggest energy players on the planet to join the club. Countries like the United Arab Emirates and Iran were suddenly at the table. And most importantly, Saudi Arabia was leaning in. Imagine a massive conference hall in a city like Kazan or Johannesburg in late 2024. The air is buzzing with the sounds of a dozen different languages. There are no American flags in this room. There are no European Union officials. Instead, you see leaders who represent nearly half of the world's population. They aren't just there for a photo op. They are talking about a new world order. They are discussing how to trade with each other without using the dollar. They are looking at maps of new trade routes that bypass the old Western hubs. This is the new oil club, and it has enough power to rewrite the rules of global energy. The expansion of BRICS Plus was a direct response to the events of 2022. These nations saw the dollar as a tool of American foreign policy. They wanted a system that was neutral. They wanted to trade their oil, their wheat, and their minerals on their own terms. When the world's biggest oil producers join forces with the world's biggest oil consumers, you get a closed loop. They don't need the world coupon anymore. They can just trade with each other. This is the new club that is challenging the king, and the king is starting to look very vulnerable. Finance people still go back and forth on whether these sanctions actually backfired. Some say the US had no choice but to show its strength. They argue that protecting global norms is more important than currency dominance, but others look at the 2025 data and see a massive strategic blunder. They see a world that is actively de-dollarizing. They see central banks that are no longer buying US debt. Instead, these banks are looking for something older and more tangible. They are looking for gold. Now imagine the belly of a cargo plane landing in an airport in the Middle East. It is the middle of the night. The runway lights are flickering. Heavy armored trucks are waiting on the tarmac. Workers are unloading heavy wooden crates. Inside those crates are bars of pure, physical gold. This isn't a scene from a movie. This is what was happening throughout 2024 and 2025. Emerging markets were quietly dumping their US treasuries. They were selling the paper debt of the United States and buying gold bullion. Gold is the ultimate no-return address asset. It doesn't live in a digital ledger in New York. You can't freeze it with a phone call. It just sits there, heavy and valuable in your own vault. The scale of this shift is hard to wrap your head around. For decades, US treasuries were considered the risk-free asset of the world. Buying them was like putting money in a global piggy bank. But in early 2025, the demand for these treasuries began to wobble. Central banks realized that if they held US debt, they were essentially lending money to the person who holds the off switch to their economy. So they stopped lending. The gold rush of 2025 was a vote of no confidence in the old system. It was a sign that the world was moving toward a multipolar financial reality. You might notice that the news doesn't always talk about this in plain English. They use terms like foreign exchange diversification, or strategic autonomy. But the reality is much simpler. It is a divorce. The rest of the world is moving out of the house that the dollar built. They are taking their toys and their oil and going somewhere else. This isn't just a political spat. It is a fundamental change in how the world calculates value. When a country like China or India starts paying for Saudi oil in their own currencies, that demand for the dollar evaporates. It doesn't go away all at once. It happens barrel by barrel and ship by ship. The tension in 2025 was thick enough to cut with a knife. Every month, a new trade agreement seemed to pop up. None of them involved the dollar. These weren't small deals either. We are talking about billions of dollars in trade for things like liquefied natural gas and heavy machinery. The BRICS Plus countries started building their own version of the SWIFT banking system. They created their own credit rating agencies. They even started talking about a common currency backed by a basket of commodities. Each step they took was a step away from the American orbit. By the time 2025 was halfway through, the petrodollar was a shadow of its former self. The world was no longer forced to use the dollar for energy. It was a choice. And increasingly, countries were choosing something else. This wasn't because they hated America. It was because they wanted to be safe. They wanted to know that their money would still be there tomorrow, regardless of what happened in Washington. This transition is the heart of the current crisis. The US used its financial power as a weapon, and in doing so, it showed the world why they needed to find a different shield. The new club isn't just a challenge. It is the beginning of a world where the king doesn't get to make all the rules anymore. Imagine sitting at a kitchen table on a Tuesday morning in early 2025. You are staring at a grocery receipt and a stack of utility bills. The numbers do not seem to make sense. A gallon of milk costs $1 more than it did a few months ago. The price of a simple box of cereal has climbed toward the double digits. It feels like your paycheck is shrinking even though the numbers on it stayed the same. This is the moment the global petrodollar collapse stops being a headline and starts being a headache. It is the moment the exorbitant privilege of the American dollar finally runs out of steam. For decades, Americans enjoyed a hidden discount on everything they bought. Now, that discount is being revoked. For a long time, the dollar acted like a massive vacuum cleaner. It sucked up cheap goods from all over the world and brought them to American shores. Because everyone needed dollars to buy oil, they were willing to trade their electronics, clothes, and cars for those green pieces of paper. This kept inflation low and standard of living high. But as the petrodollar system began to crack in 2025, that vacuum cleaner started to blow air the other way. When foreign nations stopped needing quite so many dollars, the value of that currency started to slip. This shift hit the average person right in the gas tank and the pantry. Picture a busy port in California. Huge cranes are lifting metal shipping containers off a vessel from overseas. Inside are the latest smartphones and heavy machinery. In the past, the companies making these goods were happy to take dollars and hold them in their banks. But in the spring of 2025, the mood changed. Reports from international trade desks showed that exporters were starting to demand higher prices to compensate for a weaker dollar. Some were even asking for payment in other currencies. This was a direct result of the dollar losing its monopoly on the energy market. If a factory in Shanghai does not need dollars to pay for its electricity, it has less reason to accept them for its products. Now, look at a news segment playing on a TV in a crowded airport lounge. The ticker at the bottom of the screen is flashing bright red. A financial correspondent is speaking quickly, his voice tight with a hint of panic. He is reporting on a failed treasury auction. This is one of those technical events that usually only bankers care about, but today it matters to everyone. The US government was trying to sell its debt to the world. They needed to borrow billions to keep the country running, but the bidders weren't there. For the first time in years, the bid-to-cover ratio dropped to a level that made the markets gasp. Major central banks in Asia and the Middle East simply sat on their hands. They weren't buying the debt of a country whose currency was no longer the undisputed king of oil. This failure sent a shockwave through the financial system. When the government cannot find enough buyers for its debt, it has to do something drastic. It has to raise the interest rate it pays to entice people to lend. It is like a store putting a massive clearance sign in the window because no one is walking through the door. But this clearance sale has a high cost. As the government pays more interest, the cost of borrowing for everyone else goes up too. Suddenly, that 30-year mortgage for a first-time homebuyer is no longer affordable. The interest on a small business loan doubles. The king is having to pay a premium just to keep the lights on, and the citizens are the ones who feel the pinch. Analysts still argue about whether this was an avoidable policy failure or the inevitable result of a shifting world. Some say the US spent too much and borrowed too heavily for too long. They argue that the petrodollar was the only thing masking a deeply broken fiscal house. Others believe the shift was purely geopolitical, a move by rivals to topple the American giant. Regardless of the cause, the outcome in 2025 was a tightening of the belt for the entire nation. The government was suddenly spending more on interest payments for its debt than it was on its entire military budget. It was a staggering realization that changed the national conversation overnight. Picture the inside of a high-security meeting room at the Federal Reserve in Washington. The walls are thick, and the air is heavy with the scent of stale coffee. A group of the most powerful economists in the world is staring at a series of charts. One line shows inflation climbing as the dollar loses its purchasing power. Another line shows the economy slowing down because interest rates are so high. This is what they call a lose-lose situation. If they cut interest rates to help the economy, the dollar will fall even further and prices will skyrocket. If they raise rates to save the dollar, they might trigger a massive recession. You can see the exhaustion on their faces. Their old tools, the ones that worked for decades, are suddenly failing. The tension during these months was palpable in every major city. It wasn't just about numbers on a screen. It was about people making hard choices. Imagine a family standing in a car dealership. They need a new van to get their kids to school, but the prices are 20% higher than they were last year, and the monthly payment has nearly doubled because of the interest rates. They walk away from the deal. This happened thousands of times across the country. The American consumer, the engine of the global economy was starting to stall. The loss of the petrodollar meant the US could no longer export its inflation to the rest of the world. For the first time, we had to deal with the consequences of our own spending. This period also saw a major shift in how the world viewed American stability. For 50 years, the US Treasury was the safest place to park cash. It was the gold standard of debt, but as the 2025 auctions continued to struggle, that reputation began to tarnish. Large institutional investors started moving their money into hard assets. They bought real estate, gold, and even infrastructure projects in other countries. They were looking for an exit strategy. The dollar was no longer the only game in town, and the smart money was starting to diversify. This exit of capital only made the situation at home worse, creating a feedback loop that was hard to break. The reality of a weakening crown is a bitter pill to swallow. For generations, the US was the world's bank, its policeman, and its primary consumer. This was all possible because the dollar was the oxygen of the global energy market. Without that special status, the US is becoming just another country. A very powerful one, yes, but one that has to live within its means. The 2025 crisis was the wake-up call that the free lunch was over. Every time you see the price of an imported shirt or a gallon of gas go up, you are seeing the cost of a world that is moving on. The crown is still there, but it is much heavier and much less shiny than it used to be. The struggle of the Federal Reserve in 2025 highlighted a fundamental truth. You cannot maintain a global empire on a credit card if people stop believing in the currency you are using to pay the bill. The debt spiral became the central story of the American economy. Every dollar the government had to pay in interest was a dollar that didn't go towards schools, roads, or innovation. It was a massive transfer of wealth from the American taxpayer to the foreign creditors who still held the debt. This wasn't just a financial shift, it was a psychological one. It forced a nation that was used to abundance to start thinking about limits. The outcome of this struggle is still unfolding, but the era of the dollar as the undisputed king is a chapter that is rapidly closing. Imagine a world where money no longer has a physical shape. It doesn't live in a leather wallet or a bank vault. Instead, it exists as a flicker of light on a server halfway across the globe. For decades, those flickers of light always had to pass through a single gateway. That gateway was the United States banking system. If a company in Brazil wanted to pay a supplier in South Korea, the money almost always had to stop in New York first. It was the world's ultimate choke point. But as 2025 progressed, the world began to build a new set of digital pipes. These pipes are designed to bypass the old gatekeeper entirely. This is the new digital frontier, and it is changing the rules of global power. Think about a high-end office in a Singapore skyscraper. It is late at night, and the city lights are reflecting off the floor-to-ceiling windows. A young financial analyst is sitting at a terminal. He isn't looking at a traditional bank interface. He is logged into a platform called mBridge. This project is a collaboration between the central banks of China, Thailand, the UAE, and Hong Kong. It uses blockchain technology to settle cross-border payments in seconds. Usually, a dollar-based transfer would take 3 to 5 days. It would involve multiple fees and layers of red tape. But on this screen, the analyst watches as millions of dollars worth of value move from one country to another instantly. The silence of this transaction is what makes it so revolutionary. There is no American bank involved. There is no waiting for the New York markets to open. There is no risk of the transaction being blocked by a Western regulator. This is a direct, peer-to-peer exchange of national digital currencies. In late 2024 and throughout 2025, the mBridge pilot program moved from a test phase to a full-scale operational tool. It represents a massive leak in the bucket of an American financial influence. Every transaction that happens on mBridge is a transaction that doesn't need the dollar. It is a quiet, digital rebellion against the old order. Now, shift the scene to a noisy, bustling port in the East China Sea. A massive tanker is pulling alongside a pier. This ship is owned by PetroChina, one of the largest energy companies in the world. As the oil starts to flow into the storage tanks, a digital contract is being finalized. In late 2023, PetroChina completed its first international oil trade using digital yuan. By 2025, these trades became a standard part of the company's operations. The payment didn't happen in a Manhattan clearinghouse. It happened in a digital wallet controlled by the Chinese government. This was a moment that many Western analysts said would never happen. They thought the dollar was too convenient to replace. They were wrong. This shift to digital payments is the modern version of the 1970s oil shocks. Back then, it was about the physical supply of fuel. Today, it is about the digital rails that the money travels on. When oil is traded in digital yuan, the United States loses its visibility into global trade. It can't see where the money is going. It can't use its usual tools of financial statecraft. Imagine a government official in Washington staring at a map of global money flows. Suddenly, huge sections of the map are going dark. The data isn't there anymore. The all-seeing eye of the dollar is being blinded by encryption and new technology. There's still a real disagreement on whether these digital systems are actually secure or just a new way for authoritarian governments to control money. Some argue that the transparency of the blockchain makes it harder to hide illicit activities. Others believe it is the perfect tool for evading international rules. But for many countries, the question of security is secondary to the question of sovereignty. They want to own their own pipes. They are tired of paying rent to the US banking system in the form of fees and political compliance. This digital frontier is giving them a way out. The change is also hitting the unseen plumbing of global trade, insurance, and shipping contracts. Imagine a rainy afternoon in the city of London. For centuries, this has been the heart of the global insurance market. If you wanted to insure a cargo ship, you came to Lloyd's of London. And you paid your premiums in dollars. But look closer at the contracts being signed in early 2025. You notice something different. New insurance hubs are popping up in Dubai and Shanghai. They are offering policies priced in regional currencies. They are catering to the BRICS plus trade routes. If a ship is carrying Saudi oil to a refinery in India, the owners are starting to ask why they should bother with dollars at all. This might seem like a small detail, but it is a massive shift in the global hierarchy. Shipping and insurance are the glue that holds global trade together. When that glue is no longer dollar denominated, the dollar's role as the unit of account starts to crumble. It is like a language that everyone used to speak, but now people are finding they can get by with their own native tongues. The convenience of the dollar is being outweighed by the flexibility of these new digital and regional systems. By mid-2025, the number of non-dollar shipping contracts had reached a tipping point. It was no longer an experiment. It was the new way of doing business. The tension in the American financial sector during this time was palpable. Banks in New York began to realize they were losing their most profitable customers. Large multinational corporations started keeping bigger balances in foreign currencies to settle these new digital trades. The Federal Reserve tried to respond by speeding up work on its own digital dollar, but they faced a wall of political opposition. Some lawmakers were worried about privacy. Others were worried about the impact on traditional banks. While the US debated, the rest of the world acted. The digital yuan and the mBridge system didn't wait for permission. They just grew. You can see the consequence of this in the way countries handle their rainy day funds. In the past, those funds were always held in US Treasury bonds. But in 2025, central banks started keeping a portion of their reserves in digital assets and regional currencies. They are hedging their bets. They are preparing for a world where the US financial system is just one of many options. This isn't just about a petrodollar collapse. It is about the unbundling of American power. The digital frontier has created a series of exits, and the world is taking them. Now picture a conference room in a quiet European capital. The mood is somber. European leaders are realizing they are caught between two worlds. They are still closely tied to the US system, but their companies want access to the new digital markets in the East. They are watching as the choke point of the dollar is circumvented. They see that the 2025 shift is permanent. The digital pipes are laid, and the water is already flowing. This is a world where geography matters less than technology. And right now, the technology is moving away from the center of the old empire. The digital frontier has turned the global economy into a multipolar landscape. There is no longer a single king of the mountain. Instead, there are several mountain ranges, each with its own rules and its own currency. The outcome for the United States is a loss of its most powerful weapon, financial oversight. Without the ability to monitor and control the world's money flows, the US is finding it much harder to project power abroad. The collapse of the petrodollar in 2025 was the spark, but the digital frontier is the fuel that is keeping the fire burning. The world is moving on, and it is doing it at the speed of light. Take a look at the world map hanging on a classroom wall. For your entire life, that map has had one invisible center of gravity. Everything flowed toward North America. But by late 2025, if you could see the actual lines of trade and money, that map would look completely different. The lines are no longer all pointing toward New York or Washington. They are crisscrossing between Riyadh and Beijing, between New Delhi and Moscow, and between Sao Paulo and Johannesburg. This is the reality of a multipolar world. The exorbitant privilege of the United States, the ability to live beyond its means because the rest of the world had to use its currency, is officially a thing of the past. It's a sobering moment, but it's also the start of a new chapter. This shift has forced the United States to face a reality it hasn't dealt with since the 1940s, a budget that actually has to balance. Imagine a congressional hearing in late 2025. The room is quiet, save for the clicking of cameras. A budget director is presenting a report on the national deficit. In the old days, the US could just print more dollars to cover the gap, knowing that global demand for oil would soak up those extra bills. But now, with oil being sold in a basket of currencies, that sink for extra dollars is gone. The director explains that the government has to make a choice, either massive tax hikes or deep cuts to programs that millions of people rely on. The free lunch provided by the petrodollar has officially been taken off the menu. The impact on the American manufacturing sector has been a wild ride of mixed signals. On one hand, a weaker dollar makes American-made goods cheaper for people in other countries to buy. You might see a factory in Ohio suddenly getting more orders for its specialized machinery from customers in Southeast Asia, but there's a catch. Most of those factories rely on imported raw materials and components. Because the dollar's purchasing power has dipped, the cost of those parts has gone through the roof. It's a high-stakes balancing act. Imagine a factory owner looking at his books. He has more customers than ever, but his profit margins are thinner than a sheet of paper because his electricity and steel costs are soaring. Finance people still go back and forth on whether this de-globalization is a tragedy or a necessary correction. Some argue that the world had become too dependent on a single point of failure, the US dollar. They say that a fragmented system is actually more stable because a crisis in one country won't automatically sink everyone else. Others warn that we are entering a more dangerous era where trade is used as a weapon by everyone, not just the West. This debate isn't just happening in universities. It's happening at kitchen tables and in boardrooms. People are trying to figure out how to build a life in a world where the old rules of globalization are being rewritten. Now imagine a small tech startup in Austin, Texas, in the winter of 2025. The founders are sitting around a laptop. In the past, they would have dreamt of going public on the New York Stock Exchange and raising millions in venture capital. But the capital is tighter now. Instead, they are looking at tokenizing their company and seeking investors from a global pool that uses various digital currencies. They are adapting. They aren't waiting for the old system to fix itself. They are learning to speak the new language of a multipolar economy. This is the American spirit of resilience, but it's being applied to a much more competitive and crowded global stage. The outcome of the 2025 petrodollar collapse isn't a Mad Max-style apocalypse. It's more of a slow, grinding adjustment. It's a move from a world of one superpower to a world of several major players. You see this in the way global trade routes are shifting. New Silk Roads are being paved with digital contracts and regional alliances. The US is still a massive player. It still has the most powerful military and some of the world's best technology, but it is no longer the only person at the table with a microphone. It has to negotiate. It has to compete. It has to produce value that the world actually wants rather than just providing the currency the world is forced to use. Take a second to look at your own surroundings. The way we live is going to change. We might become a nation of savers again, rather than a nation of consumers. We might see a revival of local manufacturing as shipping costs and currency fluctuations make made at home more attractive. The 2025 transition is painful, yes, but it's also a forced return to fundamentals. It's about rediscovering what makes an economy strong when you can't just print your way out of trouble. It's a world that is more fragmented, but perhaps, in the long run, more honest. The story of the United States and the petrodollar is a reminder that nothing in history is permanent. Systems are built to solve the problems of their time, and when the world changes, the systems have to change too. The handshake of 1974 served its purpose for 50 years. It gave us a half-century of dominance. But the world of 2026 is not the world of 1974. We are moving into a future where the dollar is just one of many ways to pay for the energy that keeps our lights on. It's a world where power is shared, where technology bypasses old borders, and where the dying of an old empire is really just the birth of a new multipolar reality. This shift is something we are all going to be living through together. It's not just a story for bankers or politicians. It's a story that affects what we buy, where we work, and how we plan for our futures. I'd love to hear from you as we navigate these changes. Where are you watching this from today? What does the economic situation look like in your neck of the woods right now? Are you seeing prices shift, or are you noticing changes in the businesses around you? And looking ahead, what are your plans for the next year to stay ahead of these global trends? Drop a comment below and let's get a conversation going. If you found this deep dive into the 2025 petrodollar shift helpful, it would mean a lot if you could hit that like button. It really helps the channel and lets me know you want to see more stories like this. And if you haven't already, make sure to subscribe and turn on notifications so you don't miss our next video. We've got a lot more to cover as the global economy continues to transform. Thanks for hanging out and taking the time to look behind the curtain of the financial world with me. I'll see you in the next one.